For importers and international distributors, the true cost of inventory is not the supplier's invoice price. It is that price plus every cost incurred moving the product from the supplier's dock to the final warehouse destination. When a shipment involves multiple suppliers, multiple consolidators, and multiple legs of freight, each applying to a different subset of products, allocating those costs accurately and getting them into the FIFO cost layers of the right items is a complex accounting requirement that most ERP systems cannot handle natively. Consider a realistic example. A beverage distributor in Bermuda places orders with 3 California wineries and 1 whiskey supplier. The 3 wineries ship to a California consolidator who fills half a container. That half container travels to Boston, where a second consolidator fills the container with the whiskey. The full container then makes the ocean voyage to Bermuda. The cost components include the California consolidator's fees, the freight from California to Boston, the Boston consolidator's fees, the ocean freight, the ocean insurance, the harbor freight at the Bermuda port, and the freight from the port to the final warehouse. Some of these costs apply only to the wine. Some apply only to the whiskey. Some apply to both. The user may also define additional cost components specific to their business. Carillon handles this through its container processing function, which is what Carillon calls landed cost. At the time of container receiving, all cost components, including each leg of freight, each consolidator's fees, ocean freight, ocean insurance, harbor fees, delivery to the final warehouse, and any user-defined cost components, are allocated to the appropriate products and flow directly into the FIFO cost layers for each item. The California consolidator's fees are not attributed to the whiskey. The Boston to Bermuda ocean freight is attributed to both the wine and the whiskey in the appropriate proportions. Each bottle of Napa Chardonnay received carries its precise share of every cost component that applied to its journey. That is what it actually costs to land that bottle in the warehouse. And that is what COGS reflects when it is sold. NetSuite provides meaningful landed cost functionality. Oracle documents landed costs on item receipts, vendor bills, and inbound shipments, including allocation by quantity, value, or weight. Oracle also documents inbound shipment management, which can group items from multiple purchase orders into a single shipment and apply landed costs across the shipment or to specific line items. For straightforward single-leg shipments, that capability is useful and should be acknowledged. What NetSuite describes as its landed cost feature is functionally similar to what Carillon calls inventory receipts, receipt-level cost allocation for straightforward shipments. Carillon's container processing addresses a more complex and specialized requirement. The multi-leg, multi-consolidator scenario is where Carillon's container processing goes beyond NetSuite's documented standard landed cost model. Oracle's documentation describes allocation within receipts, vendor bills, inbound shipments, and transaction lines, using methods such as quantity, value, or weight. There is no documented native structure for tracking multiple legs of a journey where each leg applies to a different subset of products and generates its own cost components that must be allocated only to the products that traveled that leg. A key documented constraint reinforces this. Oracle states that a landed cost vendor bill can be sourced to only a single item receipt. If the California consolidator's fee needs to be allocated across 3 separate wine receipts from 3 separate wineries, that requires the user to select manual as the source and enter the cost separately on each receipt. While NetSuite allows for the creation of custom landed cost categories, the standard automation is designed to apply those costs to the shipment as a whole. Carillon's container processing differs by allowing cost components to be tied to specific journey legs, ensuring that a California consolidator's fee is never attributed to goods that did not travel that leg. A distributor handling complex multi-leg international shipments in NetSuite may need detailed manual allocation, multiple shipment or receipt records, suite script customization, or a specialized process designed to approximate what Carillon handles as a standard container processing workflow. For importers and international distributors where landed cost accuracy directly drives gross margin reporting, pricing decisions, and inventory valuation, Carillon's container processing provides a level of journey leg precision and automation that NetSuite's standard landed cost tools are not designed to match.